Hello folks, LA here. This is the weekly report, doing it on the 8th for the 6th. And last week we had a mixed market to some extent, with the NASDAQ, NDX, as well as the S&P all positive by the end of the week. Russell still to the downside. Bitcoin was up. You had bonds getting hit again, as did gold. And the dollar was almost flat last week. For some context, you can still see there's huge gains on the year, although the small caps at least are still negative. Bitcoin have had a big year, of course, and the dollar's had a big year, and bonds have had one of the worst years ever. So what was happening out there is what has been happening. That is that the big mega caps were pushing it to the top side again, and unless it was tech related, right? You can see here the only positives this week were all technology. Otherwise, it was down. If we look at the year-to-date gainers, other than the builders, they all fairly strong still, and they're all tech-related for the most part, other than industrials. Industrials are kind of on the bubble. It looks to me like the builders may have actually turned. Bear market here in the durables and the utilities. We finally look like we may have a top, a short-term top taking place in the 10-year notes. Here's this wide price spread bar. And then you see a little down, and then you see the attempt to go up and break out that fails, leaves like a hanging man. This looks like a reversal. That was a reversal on the employment numbers. And that's why I'm saying that it looks like we may have a short-term top, which of course is going to be positive for the market. If we move over and look at the opposite side of this, the IEF, you can see on the daily, this actually gets lower, finishes higher, less volume. So that's a test failure to the downside. That suggests also that the bonds have probably topped out on this time frame. And if we have rates topping out, then we probably got a dollar topping out, and actually the dollar is starting to look that way already on the daily time frame. But don't get too excited here, because even if that's the case, right, if we're looking at a monthly chart, you just had a major breakdown. It actually broke on the weekly and the monthly at the same time. That says it can extend lower immediately, which is what it did. But expect a bounce to take place and bring this back up into what is now probably a very heavy supply line off this bar and off this swing point low over here. And so my take is that you're going to get a reprieve, or we're going to get a reprieve in this market on the equity side, right? But then these bonds are going to get hit again, and that's going to be bad for equities. Now, this is a monthly chart, so this can take 2-3 months to play out. And of course, 2-3 months gives us the fourth quarter rally, which is what I'm saying here, right? There's time for that year-end rally to take place. And, it would take the indexes pretty good push back up to get this into play and to believe it's in play. So here I'm looking at the daily on the S&P 500. Here's that big employment reversal spike. Bearish retest region is still up here. We haven't hit it. We tried to get there, didn't quite get there before, so it's more than 6 bars now. So more than likely when we get into this zone, this is going to reverse us back down. I would expect that we'll see it hold somewhere above the lows, maybe down as low as this 42.66 area, and try to go back up. So if I clean this up and draw it in and say, okay, what can we do? We can bounce up into here, come back, and then continue on up to actually finally break it. Over on the weekly chart, you got the same sort of thing. Now remember, we got a bullish retest region. This is the first test into it. You got 2 long tails underneath it now in a reversal, hammer reversal. That suggests it's going to push higher. Now there's a bearish retest right above it. Here's the top of it. Until we get over that, I don't think you can expect that this market has turned the corner and is going to make new highs. So that's the big test longer term on the weekly chart. But I'm positive, and I'm positive because the NASDAQ is already taking it out, right? This is on the daily. Here's the bearish retest region. That spike back up on Friday took out that retest region. So that suggests it's going to happen on the S&P as well, probably. And so if I'm thinking things are going to get better, right, I want to look and find things that are going to make money. And so what are the best looking sectors? The way I usually do this is I take and look at the sectors, and then I look at the industry groups inside those sectors, and I find the strongest stocks if I'm not picking the sector as general. Now, because I believe we have probably just a 2 or 3 month rally, if that's what we're going to get, I actually want to take things with the highest beta I can. And so I'm probably not going to take ETFs on major indexes or ETFs on sectors themselves. I'm probably going to look inside these, and I'll show you in a second what I mean. But here's the XLB, the XLE, the SOX, the industrials, although I'm a little iffy on the industrials, the technology, of course, and even healthcare potentially, but healthcare, just like industrials, is a little bit more iffy. Those are the strongest looking sectors. Now, how do you go inside the sectors? Well, you go to sector trends on the site and use it, and let me show you that. So here's the site live. If I come over here, get out of the watch list and go to sector trends, just click on it. That's going to bring up all the trends of the indexes, and then it's all the major sectors inside of it. So we were just saying that, you know, technology is a good one. So let's take it, XLK. If we click on XLK, it's going to go in and it's going to figure out what are all the industry groups inside the XLK, like computer hardware group, like whatever's next, consulting services group. And then what we can do, or what I typically do, is I sort them. I just click on this and sort them, and I find the strongest ones inside that. And then I can click on them, bring up the charts, and I can see what those charts look like. So like here's the weekly chart of FTI Consulting. Here's the daily, and as you can see, it's coming up to an area where it potentially is going to break out on the daily. And as I do that, right, I can find the best stocks in the group. Here's another one, Huron, right? This one's even stronger. You can see it's already up there. Did a retest regen on the daily. It's going to try and regenerate higher. And so this is what you can do to go find your best stocks. Moving on here, here's the fundamental factors. Last week, you know, the Fed head's still singing that same song about higher for longer. Most hard data keeps coming in lighter, while the soft data keeps coming in stronger. A good example this week was the ADP. The ADP roll came in, said it was 89 versus 153 expected. That's better than expected for this market. Better than expected in that you won't lower employment, right? Because right now everybody thinks the economy's going strong, gangbusters. Well, on Friday you got the soft data, which is the non-farm payrolls. I say it's soft because it's actually a survey. And what do? They come in hard. They come in high, 336 versus 170. And so you can see that, you know, if you look at most hard data versus the soft data, right, you're getting very mixed pictures. Soft data seems to be optimistic. Hard data seems to be more realistic. So that's something to keep in mind as you look at the data points. Next week, so much more Fed speak every day, probably 15, 16 speakers. CPI, PPI, many countries reporting Wednesday and Thursday, including the U.S. I think that's the biggest number this next week. And then, of course, earnings start up, and I expect those to be positive reactions. We'll have to see if that plays out. Okay, what's the bottom line here? Well, we knew coming in last week that we had a lot of stretch to the downside, right? And then we found the edge on Friday's employment number, got a huge bounce off of that. Now we got to see the follow through, and that's what we were talking about above on those retest regens. We still don't have enough evidence to suggest that downtrend is done. We need bearish retest regen failures on the S&P 500. That would take and make the congruency between the indexes and allow us to move higher. Remember, there's a lot of bearish trends on the daily chart that are going to need to change over the near term. Between now and the end of October into the first week of November, most of these are going to try and flip. What does that suggest? Well, that suggests this market's going to have to move higher. And so I suspect this all plays in together and is going to allow us to get that fourth quarter rally. The most interesting tidbit, well, this last week was a good example of a reversal, you know, on the edge. And what I mean by the edges is if you think of the trend as a move and then a reversal, the edge is this part down here, right? It's where that trend that was in effect reverses and takes off the other way. So the edge is where you see the fastest moves. It's where you can make the most money in the shortest period of time. The hard part is, of course, timing the edge. It's very difficult to do. Most systems out there, trading systems, are based on trend, right? And that's true of both professionals and retail. And if you can imagine it, what happens, and if I look at this picture down here, is as trend gets underway, right, then it really starts to go, right? All those trend following systems start firing at different price points depending on what the trend following system follows. And as it does, more and more inventory gets sold. And that pushes and pushes and pushes until you reach some point, right, where you find an edge. Of course, you don't know it ahead of time where the edge is going to be, but you can kind of clue in sometimes where the edge might be. And the way you do that is you look to see on longer term time frames where is something that says that there may be an edge. And remember, we had a bullish retest regen, first chance back, right? First test. It's about a 92%er that this thing is going to hold and at least bounce back into here. If not, go higher and regenerate. And so that retest regen off that swing point high, it did a full retest regen, which actually says the market was a little weaker than it should be. But it did reverse, got a hammer reversal. This is probably going to move higher, as we said. That was the edge. And in this case, right, you actually had a Friday employment number that came in much stronger than expected, yet they couldn't take the market lower Friday morning. They tried twice before the market opened, and then again they tried to take it after it opened. Neither one was able to take it down. There were no more sellers to join the move. That was the edge. And when that happens, what do you get? You get fast moves off the edges, and that's exactly what we saw. Okay, moving to the trading plan here. Last week, down a little bit, I think it was. I can't remember. Actually, I think it was up on the week. We took some gains on that tranche of the ITB short. We still have another tranche left. Probably will try to take that out. If I'm right at this and we got this big bounce and we go up a little bit farther and come back down, probably going to try to take that tranche out as it comes back down. Coming week, the other thing we did is we added more inventory. Right now we're at about 70, I think it's 77% if I remember right. Inventory that's most of it's long, and so that's a good number for this attempt to move back. If we do get this move back and then start back up, I'm going to try to add more inventory for the fourth quarter rally. Going to look to peel off some of it though, and as I said before, I think the big moves are going to be in individual stocks, not in the sectors or the broad ETFs like the EEM SPY. So I'm going to want to take these out and add individual stocks to try and go long. So that's the plan. And that will probably happen over the next couple weeks. And finally, the weekly projections. I think this is what it looks like. We're probably going to get back up here and test into this retest regen, maybe get above it and get into this next one. Downside, I don't think we're going to see lows now. So at best, we're down here about 42.38. And that's it for this week. Have a great one. Stay safe.